Hello everyone. In this lecture, let's understand the classification of accounts, which is a part of double entry system. Students, you must know that basically there are three types of accounts, that is personal accounts, real accounts and nominal accounts. Now in this lecture, we would try to understand the meaning of these personal, real and nominal accounts and their further classification and the rules of debit and credit which are used for different transaction which come under these accounts like personal account, real account and nominal account. So first type of account is that is personal account. See what the name suggests, personal account. It means in these accounts all the accounts of persons, human beings and organizations are included because it is a personal account. For example, if it is a debtor account, if it is a creditor's account, if it is a bank account, that is what? That is a personal account. In order to understand it clearly, personal accounts are classified into three categories further. The first one is natural personal account, then we have artificial personal account and representative personal account. Let's understand the meaning of these accounts also. What is a natural personal account? Natural personal account represent the persons who are naturally born, like you and me. It means name of any person. It may be Virat, it may be Rahim, it may be Amit, it may be Sumit, it may be Jacqueline. These are what? These are naturally born person. So natural personal account include the names of human beings. And second category is that is artificial personal account. Artificial person means what? The person created by law, and it includes the artificial personal accounts includes the name of institutions, name of organizations and name of companies. Life, like for example, Life Insurance Corporation of India, State Bank of India, Punjab National Bank, Reliance Industries. These are what? These are the examples of artificial personal account. It means names of all businesses or non-business organization, they fall under the category of artificial personal accounts. Now come to the third category, and that is representative personal account. Simply, the representative personal accounts include the income and gains which are still unrealized or unpaid. These include unpaid expenses, prepaid expenses, accrued income or income paid in advance. Simply speaking, the representative personal account represent the group of persons to whom we have still to pay the money, and this is in the form of expenses like outstanding expenses, expenses incurred but not yet paid, that form the part of representative personal account. Now we must understand the rules of debit and credit applicable to the personal accounts. It means if a transaction is given and in that transaction a personal account appears, how to record that, which account is to be debited and which account is to be credited. So rules of debit and credit for recording transaction in this personal accounts: debit the receiver, debit the receiver. And remember one thing, students, you have to think from business point of view, the business for which you want to maintain the books of accounts. Anybody who is receiving something from our business will be debited, and credit the giver. Credit the giver. From business point of view, you have to understand anybody, any human being or business organization, if giving something to our organization, that his account or her account will be credited. So try to understand the rules of debit and credit. Debit the receiver. Understand from business point of view. Anybody who is receiving something from our business will be debited, and anybody who is giving something to our business will be credited. The rules is debit the receiver, credit the giver. Few examples of personal accounts are given as under capital accounts, drawings account, bank account. Remember, bank, name of the bank. Bank is an organization where we maintain our account. Then bank overdraft, that is also maintained in bank. Then debtors account. Debtors are the person to whom we sell goods on credit. So this form the part of personal account. Then we have creditors account. Creditors are the suppliers of raw material from whom we buy the raw material on credit. Then outstanding expenses, prepaid expenses, accrued income, income received in advance. These also form the part of personal accounts. So students, this is all about personal account. Students, the second type of account is real accounts. Real accounts include the assets of the business, the property of the business, means anything which is in the possession of the business that comes under this category of real accounts. There are two types of real accounts. The first one is tangible real accounts, and second is intangible real accounts. See, what is tangible? Anything which can be touched, which can be seen, which can be felt, that comes under this category of tangible real accounts. For example, the stockholder, land, building, machinery, furniture, vehicles. What are these? These are the examples of tangible real accounts. Some of the examples you can see here: cash, furniture, land, building. These are what? These are the example of tangible real accounts. Second category is intangible real accounts. What is intangible? Which cannot be seen, which cannot be touched, but these form the part of assets. Assets means what? Anything which give benefit to the business. So these are the intangible assets we cannot see, we cannot touch, but these are beneficial, these are useful, and these give benefit to the business, and these are our intangible assets which come under this category of intangible real accounts. The examples of intangible real accounts are these: patents, goodwill, copyright. These are the examples of intangible real accounts. Now we need to understand the rules of debit and credit applicable to this real accounts. Rules of debit and credits. Just understand: debit, for recording transaction in real accounts. Debit what comes in. Just see, debit what comes in. Simply, when these assets come into the business, it means when we buy these assets, these are debited. And credit, credit what goes out. When the assets goes out, when we make payment, or these assets are disposed of. For example, take the example of cash. If we receive cash, so cash account will be debited, that is coming in. And when any payment is made by cash, so cash is decreasing, that is going out. In that case, cash account will be credited. So I repeat this: under real accounts we include tangible and intangible assets. And rules of debit and credit which is used for recording transactions in real accounts is: debit what comes in, credit what goes out. Now we have done two accounts, two types of accounts. Rules in personal account: debit the receiver, credit the giver. And in real account, debit what comes in, credit what goes up, goes out. Now let's understand the third type, that is nominal accounts. I tell you students, what is nominal means. Nominal means anything which has no existence. Once the thing is used, that cannot be reused. And in this category we include expenses and losses, expenses and losses, and second is income and gains. See, these are the examples of nominal accounts, the things which come under this nominal account. Expenses like salary paid, wages paid, repairs, interest paid, discount allowed, electricity charges, internet charges, telephone charges. What are these? These are the example of expenses. I tell you the example of losses also. Example of losses means like bad debts, the amount which cannot be recovered from someone, loss by fire, loss by accident. These are the examples of losses. Second, income and gains also come under this nominal accounts. Example of income is sales, the revenue, then interest received, discount received. These are the examples of nominal accounts. I mean the income and gains. Now I want to write the example of these expenses and incomes. Example of expenses, first of all, salary, then wages, then repair, then electricity charges, interest paid. These are what? These are the examples of expenses. And second one, examples of income, that is sales, that is main source of revenue for a business. Then interest received, then discount received, and some other examples are also there like bad debts received, bad debts recovered account, like dividend received. These are the examples of income and gains. Now we have to understand the rules of debit and credit applicable in this nominal account. Rules of debit and credit. See, debit all expenses and losses. It means if any expense is incurred, that will be debited. Any loss is incurred, that will be debited. So simple formula is all expenses and all losses are debited, and what is credited? All income and gains. All income and gains to the business. See, if we are making payment for salary, wages, repair, electricity, interest, these are what? We are making payment. These are our expenses. These will be debited under this nominal accounts. And if there is a sales, main source of revenue for a business, interest received, discount received, dividend received, these are given in the transaction. These will be credited under this nominal accounts. So friends, we have covered three types of accounts: personal accounts, real accounts, and nominal accounts. In brief, I would like to repeat the rules of debit and credit applicables. In personal account, debit the receiver, credit the giver. In real account, debit what comes in, credit what goes out. And in nominal account, the rule is debit all expenses and losses and credit all income and gains. Remember one thing, if the same lecture you want to understand in Hindi, then visit my another channel, that is Hindi channel. Title of the channel is Commerce with Difference. There you will get videos of accountancy, business studies, and economics in Hindi. If you really like the video, press the like button, share the video with your friends and classmates, and subscribe the channel if not yet subscribed.